All right. Good morning, everybody. Again, we'll get started with our market trend model this morning. Currently looking at our market trend model, which is based on the tick index. You can review that at any of our any of your favorite investing websites. But the quick takeaway of the tick index is that it's based on buying versus selling and overall market participants. If it is trending up, obviously there's more buying than selling. The key metric that we look at is this bolded CT, this bolded white line here. This is our instantaneous or intraday cumulative tick average. We like to see that moving from lower left to upper right if there's buying in the overall market, or if it's moving down, obviously, conversely, that would be selling. We continue to kind of traverse sideways as we were in a consolidation yesterday. Our filtered cumulative tick, which is plus 1,000, minus 1,000, was below zero slightly into the afternoon, but nothing or really to speak about or write home about. Again, just a consolidation within an overall uptrend. Red above cyan, this is our longer look back ribbon for longer term positioning. Again, if the red is above the cyan and trending up, then the overall buying is occurring within the market. So again, overall takeaway is we're in a bullish uptrend and buyers are in control of the overall market. Moving on to the SPXA. This is the longer term expiries that do not turn over as rapidly. Obviously, this is institutional money and larger market participants. So the quick takeaway is we are call nominated here within the SPXA. We separate the SPXA and SPXP to get a better look of what is occurring. Net delta green up and down the whole complex. So again, this is a bullish look as well as the net OI. So again, this is kind of our 30,000 foot view of how the larger market participants are positioning with the overall market. And again, this remains bullish. Moving on to the SPXP, this is a quicker expiry or turnover of contracts. Again, full expiry turned on here. We are call dominated above and below spot price. Net GEX is 61,000 there, so we're in the positive area. So up and down the net delta, you see green, obviously, so that is bullish and call dominated above and below spot price. We see transitions below us, which is indicating that spot price is above that. As long as we maintain above the transitions, that will be supportive. Any pullback is an opportunity to get involved on the long side via pullbacks and entries into these transition areas, as long as the sentiment and structure is maintained as in a call dominated environment. Within this overall transition area, you can see some volatility if we start dropping back in down toward that 6,000 level. So that's the SPXP full expiries turned on. Moving on to the GEX ratio for the XPSP. This is a put call ratio with a time component added, which is gamma. If you've watched our 3 previous pre-market preps, I've been discussing this GEX ratio as a bullish type setup. It's moving obviously from here towards upper slope, indicating that short dated call gamma continues to go into the overall structure. Obviously that is bullish. When we start to see this start to drop back down, then that short dated call gamma is leaving the overall structure. So we can start to position a little bit more cautionary, look for some consolidation or a possible pullback. As long as we're maintaining above this one level, which is the theoretical balance between calls and puts, if it's above one, then obviously that gives the edge to the bulls because we are call dominated and call speculators are in control with the overall structure. The delta balance for history for the SPXP, again, all we're doing is separating the planes of the overall option structure above and below spot price, as indicated by above spot price, this green dotted line, which we call the right-hand plane, as you'll note down here, the net delta. And then the left-hand plane is below spot price. And then our delta balance is the aggregate of these two. As long as both of these are above zero, then that means call speculators are in control of the overall structure. And this is a projection on out in time with further expiries of what could happen if we maintain the trajectory of how the options structure is positioned. So again, above zero, which is bullish, we see the left-hand plane obviously a little bit higher than right-hand plane, so that's your in the money call status below spot price. And then you want to see this right-hand plane, which is out of the money call speculation, be maintained above zero. And obviously the delta balance pegged at 1 just continues to strengthen and indicate that the call speculators or bulls are in control of the overall structure. Moving on to our SPXP 0DTE, so we'll discuss our trading plan for today, the option structure and sentiment, and how positioning is looking heading into the day. We're call dominated above and below spot price. You see the net GEX there at 16,000. Expected move 0.84. Again, with the news this morning, that may bump up a little bit, but 51 points there. You see 0DT turned on. Our legend down here in the lower right corner gives us an indication of our transition levels. So blue is the DEX, white is the GEX. So you see there's a confluence of DEX and GEX transition. And as I've spoken about the past few days, that really gives us a great certainty of the areas that we need to stay above to remain extremely bullish and look for opportunities to get involved on the long side on pullbacks. And then once we get below transition, not necessarily we would be a risk off, but we'd be slightly more cautious for a pullback down towards the 6,000 level, or possibly even the bottom of what we call the drunken sailor range, which is this orange. You'll notice within the drunken sailor range, these expiries, these exposures are low exposures via the net OI. So this just means you're at the mercy of 0DT positioning and intraday volume metrics. So you can get pushed around a little bit more volatile, a little bit more choppy within this overall range. So what we like to do here at Gamma Edge is we like to trade with the edges or the transition areas, or a certainty of areas that we can define. So that would be the transition areas, that would be the top of the drunken sailor range, or the bottom of the drunken sailor range, or other key gamma delta levels. So these key levels obviously would be the top of transition. Any pullback to get involved there would be to the long side. And then at 60.75 is that first significant call net OI area that we would need to see the volume come in out of the money speculators and the appetite of the market to drive us up towards the 60.90 level, which is PGEX and COI. So COI is the highest call open interest for the day. So again, key metric above us. And then obviously 6,100 is that round level. You'll also notice that 60.50 is close to the top of transition. We talked about those round numbers, the quarter and half levels that usually have a little bit higher net to OI just via the overall market and option structure. So again, those are key levels that we like to watch. To the downside, if we do get below transition, we're not really looking for the market to extremely fall apart unless we get a significant change in the market trend model or overall structure and sentiment. Just to pull back down towards 6,000 would still be a bullish look within the overall sentiment and structure. If we did get below 59, 59.65, 59.70, we would think we'd have a significant change. And again, the sentiment and structure. And then 59.50 would be that lower level that we'd be looking for the market to stay above. If we get below 59.50, then something has occurred, some news event or some other positioning element has came in to continue to drive us to the downside. So takeaway is call dominated structure. You should be looking for areas to get involved on pullbacks, and then these key transition areas, spot price should look to stay above those for us to remain extremely bullish. And then to the upside, 60.50, 60.75, and 60.90 should be those upside targets. If we do fail around the 60.75 level, there may be an opportunistic short, but that would have to be a very short time frame, small position, most likely within an overall call dominated structure. So again, make sure you reference the drunken sailor range. That lower exposure can be a little bit higher volatile area where it's very choppy. So that's why we like to trade at least above the drunken sailor range and above transition, or below these areas, so we have a little bit more certainty and a little bit more confluence of key gamma delta levels. So all right, so that's it for this morning. I really don't have anything else. Thanks everybody for joining us. I'm ready to take questions if anybody has any thoughts, comments, questions they want to go over structure or anything else. Past 3 mornings we've been doing the pre-market prep, so make sure you check those out. We do the same repeatable analysis of the SPX option structure every morning. That's why we make it kind of systematic. We go through the key gamma delta levels, transition levels, and how we'll look to trade the day, and make sure you do that every day. And then you can lay out your trading plan for the day and really only trade in certain areas. There's a lot of areas that you would not want to enter trades, and that's why we try to lay those out for you here at Gamma Edge. Make sure you're checking out us at us on X at gammaedges.us and our website, or on Twitter at Gamma Edges. And also make sure you check out our newsletter, sign up, it's free. We produce a significant amount of educational content that goes through our trading plan, how we look at the overall market, and basically our philosophy of how to separate the option structure and get a good overall view of how market participants are positioned. So yes, thank you everybody for joining us. Hey Tom, how are you? Yeah, so I'll be around for about 5 more minutes. If anybody has any questions, just throw them in the chat. I'd be happy to answer those for you. So Tom, we just do as you, I can go to our nearest expiry there. So this is all expiries turned on. This is our web app. And basically you can turn on which panels you want or turn off which panels you don't want. Obviously we're only going back or we're only starting from today, which is 0 DTE, and then on out until the whatever the options chain provides us. And the last expiry of data that the options chain is providing right now is 3/31/2026. So in our web app, you can go through and you can turn these panels on or off. So you could select this week, you could select this month, you could select just the monthly OPEX, you could select the quarterly OPEX, you can do, you can structure it however you want. Really how most people use the web app and how we use the web app is obviously we get this quick snapshot view, but then we also like to go through and click through to see when we start seeing the changes in the overall structure. So you'd want to see, is there a point in time in the future where we start changing from call dominated to put dominated? That would mean that market participants, say after the June expiry, are start to positioning a little bit more bearish or less call dominated. So that might give you an idea of what is happening into the future. You see down here in the lower right corner, we have a significant amount of GEX expiring within the next overall few days. So 6/11 is a 15%, 6/13 is 18%, and then obviously the monthly OPEX or end of the month is the 15th or 15%. So where that overall money goes after these expiries, positioning wise, is also very important to us. Because that's how market participants are positioning on out in time. We all know that the markets are forward looking. Same thing with the options complex. That's how market participants are betting out in the future. And we like to see how that is changing. And this and our web app gives us a great quick intuition, or sorry, kind of a microscope into that, because you can click on and off any of these expiries and see how the overall structure is changing, whether it changes from call to put dominated. You can look at, does the COI, our PGEX and NGEX levels move up or down, and that tells you whether the market is continuing on the bullish call speculation, or is the overall structure starting to drop, which means you might be removing some of the call speculation and adding some of the put speculation. But also it changes after expiry to the structure as you remove this net GEX by expiration, the structure will move up and down also. So that gives us an idea of kind of how market participants are positioning. So hopefully that answered your question. So, and you can also combine these. You can do the SPX ticker, or you can do SPXA or SPXP, whichever one you want. So yeah. Zach, yeah, that is proprietary game edge level, but basically that is just a level, the OMC and P or COTMP level. Basically, this is a level that we started producing. It's where the largest portion of out of the money calls go in the money, and basically that is, we're saying that if you're a call speculator and you're holding out of the money calls for speculation or out of the money puts, which most people do not speculate within the money at the money, they speculate with out of the money. And this is where that highest level is, where the in or out of the money calls or puts become in the money. And what we determined was it was an area where we would see monetization, probable monetization. Again, there's a fear and greed component in there, because if you're an out of the money call speculator or put speculator holder and you have a 20 delta and it goes to a 50 delta, then most people will start taking profit into that area. Now, this is where the greed component comes in: is do the holders of those options contracts actually take profit, or do they continue to hold for a much larger move? But what we determined is that was an area of probable monetization, and a lot of times you can see stalling in that area. And then on the downside, if spot price is above COTMP, it was a level where the price would come into and you'd see monetization. And obviously, if I'm closing my put contracts, the dealer is getting shorter because they're obviously having to buy back those put contracts that I'm mechanically closing. So delta. So then they have to buy, obviously, to hedge flat on their overall book. So if I'm closing my puts into those level, then the dealer is having to buy to hedge. So a lot of times you'll see spot price come down to those levels, and then it will bounce off those levels as the out of the money puts go in the money, and we see mechanical closing of those contracts. So that's just a quick overview of those. Historically, they've been great areas for either monetization or to get long. Obviously, not just blindly. You have to be looking at other areas of the market to make sure that they're being supportive. But yeah, historically, this is where we've seen price action react pretty violently, and in those areas, usually intraday, F0DT trading also. So key thing is I'll show you the IWM this morning. So this is our pre-level IWM with our TradingView scripts overlaid. So these are all produced for our members and automated every day in the Discord. So you can just copy the script and overlay, but you see COTMC right here for IWM was 218.17, and we came right up to that level, right? So obviously if these are out of the money call speculators pre-market and they drive up towards that level and they become in the money, then you see kind of right where that monetization, probable monetization start happening. And we see this over and over and over at Game Edge with these levels that we continue to produce. So the high was 217.98, COTMC was 218.70, but the 218.17. But these areas, we talk about them as areas, and they're kind of like sponge areas that we say, listen, the price they're not going to be absolutes as we come into these areas. If I'm an out of the money call holder overnight and I'm in the money now pre-market, more than likely I'm going to take my profit, right? Because I want to get paid for that risk of holding overnight. So that COTMC level, that's pretty much how that works out. So let me know if that answered your question, Zach. So, yeah, we produce these for Thinkorswim. Yeah, absolutely. We produce these for Thinkorswim and TradingView. So if whatever platform you're using. So TradingView is just the easiest, it seems like. Now Thinkorswim, if that's your broker, then you can overlay those also. So yeah. All right, let me know if anybody else has any questions. I'll hang around for just a couple more minutes, but appreciate the interaction this morning. Appreciate the feedback. Let us know again if there's any other content you would like to see us go over in the mornings on our game plan. So there, 0DTE real quick. Again, transition areas, drunken sailor range this morning. To the upside, we'll probably be watching 60.75, 60.90, depending on where we're going to open at. Let's look where we're at. So we're at 60.52 pre-market. So really just the top of the transition area. So pull back to the top of the transition area will most likely be an area to try to get involved. Confluence of our drunken sailor range and transition areas. Again, if we're in the transition area in this drunken sailor range, it can be kind of choppy. So yeah, so even a pullback to 6,000 would be a ideal area to pull back to and stay above. So, all right, thanks everybody for joining us. Everybody have a great day, and we'll see you later. Thanks.